started. So good morning, everyone, once again to our weekly broadcast. Thursday morning, 10 a.m. once again, joined by my resident co-host, Mr. John Corey. Good morning.
Good morning, David. How are you?
Absolutely fantastic, thank you. And delighted today to be joined by Leina and Jazz from PLMD Ltd. Good morning, ladies.
Good morning, David. Good morning, John.
Good morning, John. Thank you for having us.
You know, absolutely fantastic. Looking forward to hearing from you later on this, and we'll might even get a mention of the wonderful food of sushi. Might get a mention later on before we get into the detail. But let's do the first housekeeping initially. So for anyone joining for the first time, my name is David Johnson. I'm the CEO of Leo Crowdfunding. We're an equity property crowdfunding platform, and I'll let my co-host, Mr. John Corey, introduce himself.
John Corey, Property Fortress, long-term landlord. I actually don't dye my hair this natural. The big perspective here is I've gotten to the stage where I have investments from the past, and I tend to now passively invest in other people's deals. So part of the conversation around crowdfunding is it's a nice way to see deals on a platform. You can make your own decisions. It's a lot easier to invest. You can just let the deals come to you.
Excellent. That's a nice place to be in life. I'm sure there's people aspiring when they get to your stage of life to be in a similar situation. So it's nice to have choices and different investments. And I know you've got one property you want to be saying over in Hawaii. So you have a nice choice of where to spend time.
Yeah, I don't recommend holiday investments to anybody because I don't think they necessarily perform, other than you might enjoy them. So in the marketplace, if you look at holiday destinations, too many people are always saying, well, if I could just cover the mortgage from renting it out a bit. It's like, that's not the point of investing, is to break even. Come on. So
yeah. But I always say choices is nice, and you're certainly fortunate enough. You've got some choices that you can make, which is always nice. So regular attendees to this know that from time to time I do my CEO on the road when I'm out meeting investors, attending events, doing site visits with some of our fundraisers. But I was obviously off on holiday for the last 2 weeks, and I just thought I would show a couple of snaps of CEO on holiday rather than CEO on the road. So on the right hand side was my desk when I was still doing a little bit of work, but it was quite a nice desk with the sun shining. Bottom right is our new stand, John, for our webinars. So I did a fundraiser webinar, and the laptop sat on my son's Audi, and that was the best way to get the right light and the right height. So that was a nice one. In the background is the part of the set of the Game of Thrones, for anyone who's big into that. This is the Winterfell location, so it's a beautiful location. And I believe, Leina, I think yourself a bit of a Game of Thrones fan, is that right?
I am. We're both big fans, actually.
There you are. Well, a few photographs could be shown around there. And then as you do on holiday, I managed to get a bit of good downtime, so enjoy a bit of camping. And yeah, it was great. It's always nice to get away, John, get the head showered, and plan out the next few months.
Oh, interesting question, given what Leina was asking. Okay.
Yeah. And Leina wouldn't have saw this question either. So moving on to the Ask John question for today. So there it is on the screen. It is: the predictions of an impending property crash are becoming louder and more frequent. What do you think about this? Have you adjusted your own investing strategy based on these predictions? And then when you answer, we'll let Leina maybe ask a follow-up question. So over to you, John.
So in reverse order, no. And what do I think? I think that if you want clickbait, if you want to sell newspapers or magazines, then talk about whatever's trendy. When it was Game of Thrones, you had Game of Thrones whiskey. When it's interest rate changes, you talk about property crashes because it's something, that gets people buzzing. Does it have any relevance? Maybe not. some people say, oh, 18-year cycle. And I'll say, well, when did you start counting? And conveniently, they'll say, well, 18 years ago was da-da-da. It's like, okay, but the data doesn't fit the curve. So this whole 18-year cycle crap is like, if we throw out this and throw out that and throw out this and a few more things, suddenly we can force a curve to almost look like an 18-year curve but it doesn't repeat. It keeps having all these other issues. It's so what causes a housing crash? Affordability is a big one. So inflation is an issue when it comes to affordability, and interest rates going up makes it hard to afford a home. At the same time, sellers are having life events, getting married, getting divorced, having children moving out, moving in, death in the family, whatever. So people need to sell. It's approximately 7 to 10% maybe of the property market each year turns over. And the people who need to sell at that moment may find that there aren't a lot of buyers. So you could argue a housing crash or price crash is when the buyers don't want to pay. When the sellers don't want to pay. Okay, I'm going to do this one more time. When the buyers don't want to pay what the sellers want. But for 90-something% of the homes every year that don't get sold, nothing changed. I lived through the 2007, 8, 9, whatever housing crash, and I couldn't tell there was any difference. If I wanted to look for it, maybe, but I bought some time ago. It's worth more than it is now. Did it go down in the middle? I don't know. I didn't pay attention, and I didn't put it on the market, and it didn't sell. So did it happen? The tree fell in the woods. Did it happen? The guy said something. The lady wasn't there to comment. Was he still wrong? Well, okay, fine, maybe.
Yeah, no, it's interesting that just to pick up on that point, because I know I always jest about the hair sort of giving your experience and longevity in the market, but you've saw these changes, you've saw these hyped, exploding boom markets, you've saw all the negative press, and really what you're saying is just over time you're going to get ups and downs, but not to be too focused just on one move of the market.
Yeah, and also I think it's more demographics. Are there people in the area who have jobs and otherwise ability to make payments? Do they want to stay in the area? So if you look at Northern Ireland, Northeast UK, bits of Scotland, sort of parts of Wales, where employment's down, the mines have closed, the mills have closed, there's a net outflow of people. Then you look at other areas where there's new jobs, growth industries, whether it's wind turbines or software or whatever, and people are moving in, prices go up. And it really comes more down to 20 years ago when people were born, 30 years ago when people were born, 40 years ago, and the number have gone to advanced education versus not. London has 20% higher number of people that went to university, and it has a disproportionately higher average income. So the house prices in London tend to be higher because more people are competing for the same stock.
Mm-hmm. Yeah, I think that's very, very fair. Leina, I know before we come on live, you had sort of a question you were putting to John, which is kind of related.
Okay, so I just wanted to have John's opinion on how these news are affecting the investor psychology and his investment decision in general.
Okay, so, and I'll answer slightly differently than before. So a few people might have heard some, but I'll go off on this other tangent that investor psychology is also different than market psychology. The residential housing sector is predominantly owner occupiers. So 60 whatever percent of the people in the UK own their own homes. More than half of that have no debt. So interest rates don't affect their mortgage payment because they don't have one. And there's such a large portion of the population that gets value from living in the property. Now, if you look at the investor part of the market, it's a smaller slice. It's not exactly the 40%, but if you think about investors, they have different motivations. They have different sort of forward-looking views of what's going to happen if a tenant has trouble paying the rent and that tenant moves on, you get another tenant. It doesn't necessarily mean that you can't afford the house or the property. It just means that you change tenants, but the mortgage still gets paid. So the investor psychology possibly in this type of situation where the headlines are pending house property crashes, the investors are saying, okay, let's pile up the cash because it's going to be a buying frenzy. Go, go, go. And what you also see is first-time buyers tend to be renters until they buy, or they're living at with mom and dad. And if they are waiting to buy and they think prices are going to drop, they stop looking and they start to wait some more. Well, that means they're going to rent longer. So landlords tend to win because tenants stay put. More tenants are coming into the market because people don't want to buy. Therefore, rents go up. So actually, in a falling house price market, rents tend to rise and tenancies tend to be extended. So it's hard to lose if you have cash flow. So the big thing to focus on is making sure you have cash reserves and you can continue to make the payments when tenants move out and other little changes need to be funded.
Excellent. Now some really good insights there, John. Thanks very much. Okay, and again, if people have questions for John, you just email them to us at support@leocrowdfunding.com, and we put them to John. He doesn't get to see them beforehand, so he's put on the spot when they're asked, which is a bit of extra pressure for him, which he enjoys. But there we are. So by all means, get your questions to us, and if you have any comments today, of course, put it into the Q&A. We'll deal with them as they come along. So getting on to really the main topic for today, next Tuesday, Wednesday, Thursday, John and I are doing this next fundraiser live boot camp. This is quite an intensive 3 days, and it is really for those that are property developers, fundraisers, and they need to access cash, particularly the equity part of the capital stack. But they want to do it in a legal way and understand regulation and compliance, and also there's elements of marketing, sort of structuring of deals. There's a whole lot of different subtopics, John, but the overarching is raising funds legally.
Yeah, I mean, this is definitely targeted for people, and you'll hear from Jocelyn in a bit, who have a successful business. They're doing transactions. They could expand further if they can raise capital. It's probably inappropriate for people who are just getting started out. It's very much about how you're going to fund your next deal, the deal after that, the one after that. So the focus is for people with a good track record. Part of the magic of raising money is using your track record. And if you don't have one, then it's a little harder to convince complete strangers to back a deal, and you won't have enough deal flow. So if you have, say, maybe £1 million worth of developments over a year, and you want to grow that, you want to expand that, you know how to deliver on projects, and you're finding more deals and you're finding money, this is why we've designed this program.
So all the details are there on the link you can see there, www.raisingfundslegally.co.uk/3-day-bootcamp. And there's a landing page there which will give you all the information, the details, and of course how you can register. It's £297 for the 3 days, 3 full days packed, and today is actually the last day of the early bird. So up until 5 p.m. today, there's £100 off that. So 197. This can be booked for. So any questions on that, reach out to myself or John. I'll be happy to answer those. Now you can also, that's the details there. I have another surprise at the end. I'll save that actually for now. Bit of a surprise at the end, a bit of a free giveaway, but we'll come on to that in a minute. So today we're going to actually just talk a little bit about the last boot camp we did. It was really, really good. It was the first one we did, and we got tremendous feedback. And what we thought we'd do is try and bring on some people who were actually on that one just to discuss it for a few minutes. Now, unfortunately, as the week has gone on, a few people who had hoped to be here are unable to be live, but they have sent there are some comments which I'll go through. But most important thing is Leina and Jazz are here from PLMD. They both attended the bootcamp, so you're very welcome, Leina and Jazz, today's broadcast.
Thank you, David.
Thank you.
I think it had a great impact on us, both of us and the business as well. So that's why we were so excited to come in and tell others about it.
Excellent, thanks very much. So maybe just explain your sort of your work situation with PLMD, and just explain sort of the guy behind that and the size of the company, etc.
So yeah, we're a property development business. We're based in Stratford. We develop residential property projects, and we keep the assets. So we manage them. We do the full property life cycle, from acquisition to development to management and dealing with the tenants. And we constantly need funding to extend and grow the business. Like we have a goal of achieving 1,000 homes in the next 7 years. So we would need a lot of funding for this. And the main point of attending the bootcamp was that we would develop a better understanding of FCA and other ways of raising funding rather than the traditional ways of raising funding. And yeah, I think it was very useful. I think I'll let Jasdeep introduce herself.
Yes, so I've been in the business for plenty of years. I help to manage the properties. I'm also project manager, so I'm responsible for completing projects. So I'm more towards construction and real estate management, but funding wise was not involved that much. So I've been exposed to that now. And at first I thought, this is impossible. I can't do it. We can't do it. This is not happening. But once we met David and Leo and John, I thought this is the best opportunity we could ever have. And thanks to you guys, we've been able to be here and come this far. Yeah, so.
Brilliant. Okay, no, thank you. That's really good. Good sort of intro on that. Your MD and founder, Ajay Kapoor, is someone who's very experienced in property, banking background. How many staff have you got there in the office stroke business?
Around 13, 14 of us here.
Okay, so that just gives our attendees an idea of the size of your operation there. So it's certainly a middle size sort of SME type company. So you mentioned that Leina, you were come on the course, to maybe learn more about regulation. Any other drivers, or was it just mainly to understand more about compliance?
Yeah, I think it was more about compliance and crowdfunding at the same time, because as I said, we are used to raise funding from the traditional way, but crowdfunding, I think it's a very good way of raising money, and even for offering investors to others, because it just helps us structuring investment and let everybody participate in this. You grow your business and others take benefits of this as well. It is also transparent. You can see everything that is happening on the platform. You can learn from other developers. They can learn from you. People can see the difference, your product, other products. And I think that's the second thing after regulation, which was understanding crowdfunding better.
Good. Okay. Well, Nicoletta had sent that she came to the boot camp. She'd first of all been recommended by John. So I think, John, she may have one of your clients or someone that you had met at an event.
I had met her before, yes.
Yeah, and that's how she was introduced to the boot camp, and she was wanting to learn about raising finance the right way for future deals. Julian, his driver, actually, John, interestingly, was a bit more specific. He comes from an accountancy background, but does a lot in the world of property development, and he was really interested in the regulatory requirements for a CIS, collective investment scheme. So his driver was to really try and understand the latest regulatory requirements, and certainly people came for all different reasons, John, in terms of why they attended.
Yeah, I mean, it's definitely for people who have experience, but their experiences can be quite different, and they may be playing different roles in their businesses or as an investor at this stage in their journey. And we definitely explain how to start to how to finish when it comes to fundraising. So what do you have to do to build a crowd? How do you sort of create an audience for your future deals using your past deals and case studies as an example? Then you move on to what makes for a good offer? What are passive investors interested in? What are the risks? How do you address them? How do you communicate that? and there's a whole process for putting that all that information together, and then you get to the actual launch. And David, how do companies launch when on your platform?
Not launch as in bringing a deal or getting a presence on the platform before they have a deal?
Well, I just explained all that bit about they've gotten the deal structured. Now they want to launch. So
Okay, so
that
actual
means
onboarding, yeah.
they
So
want to
there's,
kick the doors open and say, Tanya, put your money down.
yeah, okay. So there's the two routes. Even some people who have a deal, John, still choose to do a case study first, which allows them to onboard onto the platform. It only costs a couple £100 to get a case study, and they then can start to test the audience. They can do some social media marketing. They can do a project webinar and talk about a deal that has already been completed. So it's not an investment opportunity, but it is a way of starting to build the brand. Others who come with a deal who want to just go straight, then there's a £750 onboarding fee, and that is
Yeah.
the diligence
So
process.
literally, how do they kick the doors open and create a buzz?
Right. I'm not following your question. I don't know what you're trying to get at, so you may explain.
I want your money. How do I open the door?
You can contact us.
No. Okay. Tell you what, David doesn't know how to do launches. That's why he brought me in. So essentially, you're
John
creating
doesn't know
this
how to ask
opportunity.
questions.
It's like an Apple launch, and he's not an Apple user, so he doesn't understand launches. So it's all about creating a demand, creating a buzz, getting people pre-registered, so that when you actually open the doors and take pledges, people actually will click the button, say, I'm in. The early activity is important. You want to see some people taking up the deal, and on the platform, you can see it ticking over, and you can start to see that investors are investing. So then they're raising questions. There's probably a webinar. There's in the forum, they'll be posting questions, and the project sponsor that's brought the deal to the platform will be answering those questions, trying to communicate effectively what the whole project's about. We then get to when the deal's closing and we're starting to wrap things up. So last minute stragglers are rushing to get in. The deal has hit a certain level of funding. If it's successful, it'll be over its minimum. So there's this whole sort of very much like a product launch. You have a deal launch, and the whole creating buzz, creating momentum, transparency, as Leina said, about everything's visible, everything's there. So it is literally the same investor psychology and mentality to any product launch or any sort of marketing effort to get your deal out there, so the whole public can see.
Mm-hmm. Okay. So in terms of other learning points, Leina and Jazz, any particular takeaways that you learned from the bootcamp?
I will let Jasdeep.
Thank you. One of the key points I took away is that it's my favorite line, actually. People come first, then the deal, in the sense that you don't just meet an investor and just talk about the deal. You should get to know the person, the investor, and you need them to know you as a company, as a business, what you do before you give the deal. Because if you give the deal, then they're just going to, not be as interested. And yeah, that's the main key point I took away from it. And also, the breakout sessions were my favorite. It gave me the confidence to network with others rather than just sitting here and listening to you guys, which it was lovely. It was amazing.
Yeah. So British of you to thank us. Yes.
But to be able to have that session and talk to others and how they're dealing with what they're doing, where they are in that moment, we were able to relate, and it was just nice.
I think the way the bootcamp was structured, it helped us a lot. Like you talk to other developers, you see other speakers, marketing, brokers, solicitors. You have that exposure in all the areas of the business. It's not just funding, but everything that is involved with funding. So that's another good part. I think it also helped us do the first raise in Leo, and it was very smooth, and it was our first raise, but I didn't feel like our first raise. We were able to know what to say, how to market this, how to structure it, and I think that was very helpful.
Yeah, and that is one of the key learning points for people, is to understand the how to actually deliver a raise.
Well, it's also coming back to Jazz. There's, you start to understand how others are going through the same thing, and you start to understand, wow, we've already got that figured out and they don't, or wow, I'm really behind, but I'm catching up. And so it's a way to calibrate where you are in the journey. And it's a way to understand that you can sort of lean on your other friends from the conversation, that they're trying to raise money. What are they doing? What am I doing? Can I learn from other raises? Can I learn from things they did well, so that you get better at it and you realize it's a very repeatable process, and you're building a track record. And as Jazz said, it is about the people. It's also about building over time that identity, that sort of know, like, and trust feeling, that this is what we do, this is what we do well, we don't do this other stuff. You know, there are other people who do that other stuff, and you start to have a relationship with your other fundraisers, you have a relationship with investors, and it becomes a healthier environment for people to talk about deals and to be open but compliant in how they're talking about those deals.
Exactly.
Yeah. So both Nicoletta and Julian, just referred to some things that they had picked up on. Certainly the regulatory aspects, compliance was big for Julian, and Nicoletta just said she learned just so many different things over the 3 days. So that's all cool. So did attending the boot camp actually help your business? Were you able to take things from the boot camp, and did they then impact your business in the short term?
Yeah, definitely. I mean, just before the bootcamp, she wasn't really involved with me in funding, but now she's full time with me. She understands, and she's, can we say that? Is it compliant to say that? I don't think we can do that. So I think that's the best outcome from the bootcamp. And another thing is always our successful raise on Back Entry Avenue. It was an uncommon product. It was the first time that a product similar to this one was on the platform, I believe, and the raise was successful, and we discovered a huge interest from investors. And I think the bootcamp has like a great impact on this.
Yeah. Just to add to that. So during the boot camp, it was actually our first time crowdfunding. So the Dagenham raise, we were just starting to prepare that during the boot camp, and the boot camp actually gave us vital points on how to structure the deal, the onboarding process, the launching process, social media, talking to investors, getting to know them to get to know you. So all of that was really helpful on how to prepare our crowdfunding raise. And I think, yeah, so as Leina said, it went very smoothly, and the main reason was because of the boot camp.
Good.
Cool.
Oh, that's good. That's certainly good.
It's also interesting is, Jazz, it's really clear that you've moved forward in your thinking. You were, in a sense, a bit shy, and you didn't really have a grasp of the fundraising process because it wasn't what you've done in the business. You're on the project management side. And what's quite sort of funny almost because of your background, you turn fundraising into a project, and you turn it into a repeatable process, and you can actually now manage it as a process. So it sort of turns it into a repeatable cookie cutter exercise, and you get to learn what the market wants. So then you know how to tailor the second, the third, the fourth, any subsequent raises.
Yes, I agree.
Yeah, it's a good benefit. So for Nicoletta, her big benefit to her, she said, was making new connections. So part of the networking part that you're mentioning, Jazz, and for Julian, it was very much felt he then understood the technical aspects of regulation, and particularly around CISs. So he's able to take that as to his strategy going forward. So well, David, the last simple one is, so go ahead, John.
What's a CIS? You've used it a couple of times, but you haven't explained what it stands for.
Yeah, well, it's a collective investment scheme, which I mentioned earlier. So it's the pooling of investment from multiple investors into one SPV, special purpose vehicle.
And how many investors becomes a collective?
Any more than one passive investor into a special purpose vehicle becomes a collective investment scheme. There are some nuances around high net worths and collective investment schemes, but in the main, any more than one, you are in the realm of collective investment scheme, and the FCA have very clear stated rules and regulations around how they can be structured and how they can be promoted in terms of financial promotion. So it's a very relevant part to know. So for Leina and Jazz, then I suppose a rather obvious question. I think I know the answer, but would you recommend the bootcamp?
Definitely, yes.
Of course, 100%, especially if you're looking to obviously raise funding, or just generally want to gain knowledge on how to legally raise funding, then this is the place. And if you want to network, know what other people are doing, then yeah, we would definitely recommend it.
Good, excellent. Okay, well, listen, thank you very much for being here. Really appreciate that. And you can hang on just a few minutes at the end here, and you'll see. Well, first of all, if you haven't done this already, you'll be one of the first to hear about a nice wee free giveaway that I have. So there's a link there, which is like a sister landing page to the Raising Funds Legally.co. If you go to /6-step-guide, there is you can leave your details and you'll be sent a 6 easy steps to raise funds as a property developer. It's a short guide covering some of the topics that we cover in the bootcamp, but a very straightforward 6-step guide that John and I have developed and that we use when we're working with fundraisers. So this is just launched today for the first time. So anyone on there, you can do a quick screen grab and go to that link, leave your details, and we will send you out a 6-step guide. So that brings us on then really to next week, and we're not 100% sure what's happening next week because we're in the middle of our broadcast or our bootcamp, and we are actually toying, John, with how we integrate the broadcast with the bootcamp, and we haven't just found the solution as yet of how we're going to do it. But what we'd love to do is actually have the normal broadcast link in with the bootcamp, so that we have kind of everyone on a half-hour session, be it a Q&A, be it a networking session. We'll confirm that in the weekly update. But certainly looking forward, John, to this next bootcamp.
Well, the bootcamp is going to be fab, and it's always good to hear what people are doing and types of projects they have and what they expect to do going forward, because it is very much a forward-looking exercise of what's your plan for the next 12 months, and would you like to raise more money, and if you could, then how many more deals could you do? So it becomes an iterative conversation. When it comes to this, we're sharing broadcasting across channels. We'll see how well that works out.
Exactly, which is why we haven't committed to it yet. It's an aspiration as opposed to a workable plan at this moment in time. So we'll see, but there will definitely be a broadcast next week. It's just exactly what format it takes. So tune in to the Brenda's weekly update, and you'll know exactly what's happening on Wednesday. So listen, again, thank you very much, Leina and Jazz. Absolute pleasure. Say hi to AJ for me, and I look forward to hopefully being treated some more nice sushi when I next arrive over on the 14th. And we look forward to seeing you again at some point. And John, thank you again for your time.
Good. Have a good week, everybody.
Thank you, David. Thank you, John.
Thank you. Bye-bye, everyone. Bye-bye.
Bye.